Let's start with a status update with where NASDAQ stands right now. Huge exchange. 5 biggest companies in the world are part of this exchange. Tell us about the evolution throughout your time there and where it is at this moment.
Well, one, thank you for having me. And it's exciting being here. This is an exciting part of the world. What's going on at NASDAQ every day from our perspective is very exciting. One of the things that people focus on is the IPO market, which is an indicator of how dynamic the U.S. economy is and the entrepreneurship that it produces. So this year we've had 138 IPOs on NASDAQ. We had a total of about 183 last year, so we're kind of on a pace to almost meet that, but not quite. So 2019 will be a good year for IPOs, one of the historically high ones for us, but not quite as high as 2018. Why is that? Well, you have some uncertainty in the marketplace, and with uncertainty, it makes pricing more difficult, and you have uncertainty driven by, for instance, the trade negotiations between the U.S. and China, and people have to factor that in. There's uncertainty about Brexit, and then we have seen historically when we approach an election year in the United States that there's also uncertainty, and so that lack of the ability to forecast makes valuations more difficult, and it does hold back the IPO market somewhat. But it's still healthy. 7 out of 10 IPOs in the United States have occurred on NASDAQ this year. We've raised over $1 billion 4 different times in 4 different IPOs, and we're very excited about the market.
When we hear about some of the cooling from some of these hotly anticipated IPOs that have happened this year, including on the NASDAQ, is there a fear that this tech space, it's many of these companies that waited a while to go public, maybe waited too long?
I don't think so. I think the vibrancy and the resiliency of the market will remain. One of the factors that I should emphasize that NASDAQ is focused on in this area of the world is something that isn't well understood about NASDAQ, and that is that over half of our revenue comes from selling technology. And so many of the markets here in the UAE run on NASDAQ technology, the DFM, the ADX, the NASDAQ Dubai, on whose board I sit. 16% of NASDAQ is owned by Dubai. And the regulator here, ESCA, uses our technology. So one of the foundation issues in developing a tech sector, a vibrant entrepreneurial economy, is having a strong foundation in terms of a strong, transparent, well-regulated market. And that's what you have here in the UAE, and NASDAQ is proud to partner with you here in helping provide that, because technology provides a lot of not just the operational certainty that you need in running a market, but it provides you with a lot of the regulatory certainty. ESCA runs our surveillance technology, which is also run by 17 other governments around the world, including in the UK and Australia and Hong Kong. So that one of the basic elements you need to have a vibrant fintech industry, we partner with you to provide here. But in terms of companies, the timing in terms of going public or not, they have more choices today than 10 years ago. In the private market, you have many more investors, as you saw in the previous panel, very educated, well-experienced venture capitalists, sovereign wealth funds, and low interest rates that all combine to give those founders a number of choices that they didn't have a few years ago, and they can delay going public and find other sources of capitalization other than the public markets. But the public markets still are great value in terms of price discovery and it gives those founders permanent capital. And people tend to overlook that. You don't have to pay this back. When you raise $1 billion on NASDAQ, that's yours. Now, of course, you have to perform for those shareholders. You have to put out quarterly reports. You have to perform over what many view as a short-term focus that investors have in public markets. I happen to disagree with that. I think there are more and more investors who are looking for the long term, and that all investors want to see performance up close. But there are more choices for founders and entrepreneurs today.
One of the high-profile examples of this that's really come to light in the past month or so is, of course, WeWork, and the idea that as it shed its financials publicly, as those came to light, investors sort of pulled back. So first, I guess, WeWork looking like it might not even IPO at all now could, according to CNBC reporting, be completely taken over by SoftBank. Is that a loss for NASDAQ?
No, we look at it, the overall market, and the ability of our market to attract entrepreneurs. There's a great story there with WeWorks. You have an immigrant moving to the United States, being entrepreneurial, attracting a lot of capital because of his ideas, and disrupting the whole real estate market in the United States with his idea. The largest renter of space in New York City is WeWork. And that idea that those founders had, that founder had, and his investors, is going to go forward in a different form. We hope eventually will list on NASDAQ. But it's changing the whole notion of commercial real estate in the United States. It's making it more competitive. It's making our economy more vibrant. It's having people think differently about what it means to work in the United States and in the world today. So I think that idea will eventually have a place in the public markets, and the retail and public will be able to invest in it, and hopefully it'll be on NASDAQ.
So bullish on the long term.
I'm bullish on the long term there.
And you alluded to it a bit before, but this idea that companies, maybe didn't have to focus on profits as much. Does it sound like the tide is turning here, where their investors are saying, we need you to show that you're making money, that there is a long-term vision? How do you see that playing out in your conversation?
Well, I was in Silicon Valley last week, and with John Doerr and other venture capitalists, I sit on the board of something called TechNet, which is a trade association that represents the technology industry. And you are still seeing great companies with multiples of over 100 that are maybe generating $1 billion in revenue, but still not making money, but have a scalable technology idea that investors believe will eventually reach the whole world, and hasn't done that yet, but it has that power, and they're willing to value these companies at such a multiple. And that's happening today. And those companies are listed on NASDAQ. And they are able to raise money and new capital to expand their businesses. And I think we will get past the Chinese-US trade difficulties. We will get past Brexit. We will get past the 2020 election. And we will find the world economy will continue to grow, continue to innovate, and continue to create opportunity for all of us.
Do you think there will continue to be a trend where, say, Chinese companies list in the U.S. or here? How does that kind of intersection play out?
Well, one thing that's very important, I spent 20 years as general counsel of NASDAQ before becoming vice chairman recently, and that is understanding that NASDAQ is a public stock exchange, and I underscore the word public. What does that mean? It means we are open for business to the whole public by law on a non-discriminatory basis. We have to list companies that meet our listing standards. Those listing standards are approved by the Securities and Exchange Commission after notice and comment to the public. It's a public process. If you meet our standards, we don't care what your race, religion, or background is. we will list you, and you have a right to gain access to the U.S. capital markets. Those open capital markets have been an important feature of the U.S. economy for a very long time, and I think they will remain an important feature of our economy, and that's very important to us going forward.
Talk a bit about your international expansion. You have exchanges, all around the world now. Are there differences in the companies there, and how much more do you see this expansion playing out?
Yeah, we are the largest pool of cash equities liquidity in the United States, but we also operate and own the markets in Northern Europe, in Sweden, Finland, Denmark, the Baltic states, and Iceland. Those are all NASDAQ owned and operated markets, of course subject to local regulation and local control. Those markets have been growing also. Northern Europe is an area with a very entrepreneurial culture and economy. And for instance, there have been over 70 new listings in our Northern European markets this year. 40 of them have been on something we call First North, which is a market that is designed for small, early stage companies that has been very successful. There have been more IPOs on First North than on the London Stock Exchange AIM market this year. And that's, serving an economy with just 30 million individuals, and but very dynamic, very entrepreneurial, and a growing economy in Northern Europe. So we're very happy about how that economy and those markets are performing too.
And talk a little bit about this Middle East region too. What kind of growth are you seeing here?
Well, we are seeing great growth in terms of the markets reforming themselves and looking at how there can be more coordination amongst them to create a greater pool of liquidity, copying things like the DIFC, and now here in Abu Dhabi you will have a similar market. Other areas in the region that are opening up their markets to foreign investors. Obviously, the potential Aramco IPO has created more interest in the reforms that have been associated with that economy. The Tadawul market runs on NASDAQ technology, which we have been working with them on it to bring the most modern technology anywhere in the world today will be on that market. So there's increased focus on investment opportunity here. Of course, 2020 and what will be happening here in the region and all the visitors you'll be having will create great opportunity for people to consider investing here.
And perhaps in our final kind of minute here, you could give some advice to any of these startups here and many of the, particularly in the fintech sector. What does it take to get to be a company that can list on the NASDAQ? Are there certain qualities that you've seen among the success stories in your time there, or any particular standouts in your view?
Well, there are many different paths. I don't think there's one standard formula, but again, as the earlier panel alluded to, it is not easy. Being a public company is not for everyone. It requires a lot of discipline. The public markets are very demanding. They are particularly focused on financial disclosures. They're particularly focused on things like the independence of boards and audit committees. They want strong boards and strong management with great discipline and the ability to produce on a sustainable, predictable basis revenues and profits for their shareholders. And to get into the position where you have that sustainable trajectory that can attract investors in the public market takes years, and it takes a lot of hard work, and it takes a lot of discipline. And as I said, it's not for everyone. And just because you may not want to put yourself through that doesn't mean you are any less successful than anyone else. But you need to know what you're getting into. And the public markets can help fund the long-term growth of your company and provide opportunities for wealth creation for your investors.
Certainly seeing that playing out. Thank you so much for your time today, Ed. Appreciate it.